What is up, YouTube? Welcome back to Stocks by the Numbers, and I wanted to bring something to your attention here today. I just want to get right into it. I think we may have something. Name of the company, FUBO, ticker symbol FUBO, listed here on the New York Stock Exchange. Company right now, $1.67 a share, about T-minus 10 minutes to the close here. Down 3 cents, roughly 2% here on the day. As we see, the company is near the lows of the range for the day and the 52 weeks. But let's see what's going on. So market cap, we'll call it 350 million. Look at the EPS though, minus $2.82 a share, right? So that's why this company has been in the news negatively and has basically been on a massive downtrend since inception, right? If we pull up like a 1-year chart, we just scroll out, look at that. Look at that. I mean, this is something that has not been performing well, but let's see how it's doing as of late, right? So again, market cap 350 million. We come down here, you can see the EPS is bouncing around. Analyst estimates these black circles pulling back for a few quarters, but it looks like they feel that this is the bottom and we're in, potential recovery mode here going into a U-turn. The company has missed earnings on the EPS side, as we see 3 of the last 4 quarters, with one beat here, a surprise of roughly 11%, not too bad. And last quarter, they estimated minus 71 cents. The company comes in minus 76 cents. Next quarter, though, look at that jump. Estimates minus 45 cents. So if this company continues to climb, right, because if we look at earnings here, you can see revenue came in very healthily above estimates. So I understand there's some bleeding. They're spending a little bit more than they're bringing in, almost like a DraftKings, if you recall, when we looked at DraftKings several months ago before it really started to take off. You can see right now $19.34 a share. We initially looked at it $10, $11, came back when it was like $14, $15. And what happened was the company, again, posted some positive quarters, came in narrowing losses, speaking about how soon they could potentially go net income positive. All of a sudden, everyone loved it, started jumping on board DraftKings again. Shorts had to cover. And again, you can see the company went well above $20. It's one of the few green spots here in the sea of red, and I believe they just got a price target raise to like $21, $22 or something like that. And that's what happens. And that's why if you can get into a company like this, FUBO, again, FUBO, New York Stock Exchange, if you can get in, if this is near the lows, roughly $1.60, even if it drops down to like $1.52 or some shit like that, yeah, it's really going to suck in the short term. But again, if this is the low, then, I mean, we can turn around a year or two from now. This stock could be $10, $12 a share, right? We do have that potential. So that's why I wanted to bring it to your attention, because I seriously think we may have a mover on our hands. Again, 350 million, company brought in 320 million. But I wanted to do that comparison to DraftKings because it was basically the same thing, like around this time of the company, right? They were bringing in some revenue, but they were spending like $1.50, $2 to make $1. So it was justified as to why it was like trading flat, and it hit like new lows after I made the video, right? It was at like 10, it dropped down to like 960 before it bounced and rallied through to the 12s and 13s again. So, that's why we may have a similar situation here. Positioning ourselves again, $1.66, 67. All of a sudden, it slightly drops down from this level and hits a new 52-week low, like $1.55, $1.53. Yeah, it's going to suck. We're going to be pissed. Oh, I buy it and it drops again. Yeah, I get it. But also at the same time, if that's really the low, that small drop, and then it, climbs back to $2.50, $3 going into next earnings, I mean, you're not going to complain that it went down before it went up. But yeah, it's the EPS that is definitely keeping this company low. But look at the last couple of quarters, though. Bouncing around. Look at the profit margin, too. Minus 48.5%, minus 68%. That's the range. 200 million and change. This is 242 million. And as you can see, last quarter, they broke out from the low mid 200 million. Boom, now they're up to 300 million, 319 million. Look at the profit margin, though. It was minus 68% the quarter before, and now only minus 30% of that money, right? So this company, that's why I'm saying if next quarter they come out with something similar to this and they're close or meet or beat some of these estimates, we're going to be off to the races. And if we look at the financials, yes, on paper, actually before the financials, I'm sorry, you can see a slight gap down here, $1.80, and I threw the circle on for you guys, so you can see a slight gap down to $1.80. That's why if this is coming off the low here of $1.61, we may be in the short-term potential to see, boom, a little bit of a pop back up to the gap fill And again, yeah, I circled these a few times. See, a little gap from $1.80. Again, you can see a little resistance at $1.80, resistance $1.80, a little support at $1.80. Broke through, bounced off $1.80, and then made new lows. So that in the short term is going to be our level, $1.80, and it does have the potential to climb from here back up there, because you can see this was the end of December, where the company at the top of your screen, the open, the high, the low, you can see the low of $1.61 right there. And then here it hit $1.61 again. So, we sell off into our low, and then we spike up and we sell off, and this may potentially be that W recovery, and we may start to climb back into the twos and potentially even the threes. And again, if we double this, the company bringing in 300 million, that's their market cap right now. 350 million. Again, I know they're bleeding on the EPS side, but coming off a decent quarter and the way it swings, if we double this price right now, that'll be what, like 3.25, 3.30 a share, but the market cap, that'll be 700 million, right? And 300 million for the quarter times 4 quarters, that's 1.2 billion that they're bringing in for the year. So that's why, even with the losses, doubling this right now to low threes would be justified, because the numbers are supporting it. So that's why we may have found the bottom here, and we may have the rally on our hands soon. The numbers actually look pretty horrendous, in my opinion, some of them, but some of them are also showing us a different story. As we see, 0.34 times sales, wouldn't use it as the best indicator. Price to book, hey, trading at 0.86. So that means the book value of this company is what, like $1.75, $1.80 a share or something like that. So that's why that $1.80 mark, if that's the book value of the company, right, that makes sense that it fights so much to get to that $1.80. And also, I wanted to tell you guys that, of course, it does have the potential at any time to sell off and, a couple of cents and make a new low. However, look at how much it fought for $1.80, and look at how it only hit $1.61 once. And this was the company in a worse position than this time, right? So the fact that they posted a decent quarter, bounced off that same low, and haven't gone lower since then, it is potentially telling us that, again, this is our double bottom, and it may not get much worse than this, and it may be time to buy. But let's go back to the numbers. And excuse me, again, 0.86 times book value. But the return on assets, as you can see, it was ridiculously volatile, bouncing around, and then they brought it up to minus 25.5%, we'll call it, then minus 32%, now minus 38%. So it has been sliding, the return on assets. Same thing, the return on equity sliding, minus 51, minus 77.5, minus 92.25%. Return on invested capital got up to minus 34%. And has since pulled back to minus 45 and minus 53.8% respectively for the last 2 years. However, look at the gross margin. Dancing around 7.7%, then minus 8%, makes a massive 75% climb to now minus 2.1%. Definitely a good sign. The operating margin percentage, same story, minus 51.4% up to minus 40.8%, now minus 29.4%. So that's a 25% move in the positive direction. EBITDA, once again, earnings before interest, taxes, depreciation, amortization. Very good indicator for a company in the long term. You can see the EBITDA margin, minus 45.3%, minus 36.8%, now minus 26.4%, making roughly a 33% move from last year. The net margin percentage we looked at before was minus 42%. Now it's up to about minus 30%. So this company does have some big numbers and some big fundamental metrics heading in the right direction. The company, basically flat here since I've been talking, going from, what was it, $1.66, we're up to $1.70. So that's why I'm saying this may be the low here. And again, my apologies. I know I'm coming to you guys at the end of the day here. So but by the time this is published and on YouTube when you're seeing it, it may be, well, no, that's not true. You can buy the stock after hours. But, entirely your own prerogative. But this is something I wanted to bring to your attention, because I really do think we have something here. And wanted to switch over here to stock charts. We look at the daily, and you can see the MACD has been sliding, but we do have the potential to start curling here and, potentially rise and make a cross here. You can see, again, our double bottom. Excuse me, it's my New York accent coming out. Our double bottom forming here at roughly $1.61 and then potentially bouncing up. But you can see how it fought to get above the 50-day moving average here, resisted here, really bounced around and ran all the way up, rejected off the 200-day moving average. But again, slight resistance before it broke, and then it regained. Look at the 1, 2, 3, 4, 5 days in a row fighting, bouncing off that 50-day support, and then obviously earnings come in, and apparently they were only looking at the EPS side, which is really unfortunate for shareholders. However, maybe fortunate for us, right? Because we may have bought it at $2, above $2 and change. Now we can buy it near new lows of $1.60. So it may have worked out well for us. Everything happens for a reason. If you're already in the stock, my apologies. But if you're looking to get in, might be a good time. Again, we can simply rally up back to 214, even the top Bollinger Band 272, and it would be justified according to the numbers. The RSI down at 31.13, I wouldn't really use as an indicator because it has gone lower here. It looks like about 23, 22. Yeah, see 21.6. So, yeah, I wouldn't use that as an indicator. However, it's close, right? It's getting ready. It's getting ready. If we switch over here to the weekly, again, RSI 36.28, getting close, has been lower. But again, you can see our double bottom, and it may be our W recovery here back up to 322 here at this moving average 50-day on the weekly. And again, if we double that value, that will be a market cap north of a little over 700 million, the company on track to bring in 1.2 billion and narrow losses and potentially go net income positive in the future. So, has it been kind of shitty as of late? As you can see, yeah, it's been rough. And if you're in the stock, it really sucks. However, this may be the turning point. So in my opinion, you may want to consider doubling down, adding some shares to your position, or if you're not involved, we may want to strike now near the lows, potentially ride out our short-term volatility, almost knowing that we're in now a growing company that has hit the bottom, and now we're potentially ready to blast off. But that's just my opinion. I'm going to leave it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. Just like everyone on YouTube says, if you like the video, give it a thumbs up. If you appreciate the content, please consider subscribing to the channel. But if you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. And moving forward, I just want to let you know, I understand that markets are rocky and they're volatile and they're uncertain. So I do wish everyone success. I hope everyone makes a couple of dollars. I want to thank you guys for stopping by here for a few minutes. And hey, stay positive. Have a good day.